So how does a company that's famous for burning through cash suddenly start making it? I mean, it's one of the toughest pivots you can make in the tech world, right? Turning this hyper-growth machine into a profitable business. Well, today, we're going to break down the anatomy of one of the biggest turnarounds in Southeast Asia, the story of Grab.
Let's just start with a number, $11 million. Now, for a company the size of Grab, you might be thinking, that doesn't sound like a whole lot. But trust me, this number is everything. This was Grab's first ever quarterly profit, and they hit it in late 2024. It was the signal, the proof that a massive and probably painful strategic shift didn't just start, it had actually worked.
So the big question is, how on earth did they do it? Look, this wasn't some magic bullet or one single trick. It was the result of three specific, really bold, and incredibly strategic decisions that basically reshaped the entire company. Let's walk through each one.
Okay, first up, this is the move that really set the foundation for everything that came after. If you go back to 2018, the ride-hailing market in Southeast Asia was just a brutal, cash-burning war zone. Grab's biggest rival was, of course, Uber, and both of them were just lighting billions of dollars on fire with subsidies to win market share. And in the middle of all that chaos, Grab made a massive power play. It bought Uber's entire Southeast Asian operation. You have to understand, this deal was about so much more than just getting cars on the road. Yeah, it took their biggest competitor off the board, which is a huge win right there. But it also brought Uber Eats into the family, which became the bedrock for what we now know as Grab Food. The logic here is pretty clear. In a business like this, with super high volume and pretty thin margins, scale is your ultimate defense. It's your moat. This one move gave them that scale, a huge captive audience they could sell other services to, and a real defense against any new players trying to jump in.
And here is the payoff, plain and simple. With that acquisition in the bag, Grab was able to go all in on Grab Food and lock down a dominant 55% of the entire food delivery market. So you see, this wasn't just a defensive move to protect their taxi business, it was a total offensive strike that made them the undisputed leader in a whole new and absolutely massive category. All right, let's get to the second big decision. Now, this one was less about getting bigger and more about a fundamental change in philosophy. After years of just chasing growth, the whole global tech market shifted, and it shifted hard. Investors got scared, money wasn't easy to find anymore, and the pressure for companies to actually make a profit became intense. Grab knew it had to make a hard pivot. For years, the mantra in Silicon Valley and beyond was simple: growth at all costs. Burn cash, get users, dominate the market, and you can figure out the profits, later. But by 2023, that whole era was just over. Investors were not rewarding that cash burn anymore, they were demanding a clear path to profitability. So Grab had to change its DNA, shifting from that old growth at all costs strategy to a new one, profitable growth.
So what does that actually look like on the ground? Well, it meant getting really serious about cost discipline, everywhere. It meant optimizing their entire network of drivers and merchants. And, this is a big one, it meant pulling way back on all those constant incentives and promos that just bleed cash. The new focus was on their most loyal, high-spending users. The reasoning was simple. They had to prove to the market, and probably to themselves, that this whole super app model could actually be a sustainable, money-making business. And the results? They really do speak for themselves. The company pulled off a massive $334 million positive swing in its adjusted earnings in just 1 year. That's not just some accounting trick. It was cold, hard proof that their new discipline was working, and that the super app ecosystem they had spent years building could in fact generate serious cash.
Okay, on to the third and final decision. And this one is all about the future. So after they consolidated the market and they fixed their bottom line, Grab set its sights on a business with much, much higher margins: banking. What's so brilliant about this move is how it perfectly leverages everything Grab already has. Think about it. They have this giant ecosystem of users and drivers, and a lot of these folks are underserved by traditional banks. But even more important, Grab has years and years of their transaction data. And what's that perfect for? Underwriting small loans. The justification is a no-brainer. Ride-hailing and deliveries are tough, low-margin businesses. Financial services are high-margin. This move was a direct path to a much more powerful and profitable revenue stream. And guess what? It's already working. By late 2024, customer deposits in their new digital banks in Singapore and Malaysia had already blown past $1 billion. Now, that's not just a vanity number. That is a low-cost source of capital that they can then use to fund their lending operations. They're basically creating a self-sustaining financial engine. So, there you have it. Three massive decisions that all worked together. First, you had consolidation to win the market. Second, you had discipline to finally get profitable. And third, you have diversification into finance to build a high-margin future.
But of course, Grab isn't operating in a bubble here. They still face some incredibly intense competition. You've got rivals like Gojek with its own super app strategy, and you can't forget Shopee's parent company Sea with its really powerful Sea-Money fintech arm. So yeah, this battle is far from over. Which brings us to the final question, and this one is really for you to think about. Looking at this three-part strategy, consolidation, discipline, and then diversification, do you think these were the right moves? And looking ahead, is this ecosystem-first model really going to be enough to keep Grab on top for the next decade? It's a fascinating story for sure, and the next chapter is still to be written.